Welcome to the Tax Show with Brian Whitman. Peter Stephan's here from the Tax Resolution Institute. Jim Felton from Greenberg and Bass. We're here every Sunday afternoon on The Answer to talk about taxes, to talk about tax problems, to talk about business tax, to talk about payroll tax, and we have the guys here to do it. Peter Stephan's been on the Morning Answer. I call you the tax guru because I think you are. I think you are the tax guru. You literally wrote a textbook about resolving tax issues.
Well, thanks. I've been doing this over 33 years, Brian, and hopefully I've learned one or two things along the way.
In my personal experience, you've learned a lot more than one or two. You've shown me that you've learned a lot of stuff about taxes and resolving tax issues, not just for individuals, but also for businesses. Payroll tax, a very big deal at this time, and we'll talk about that in a moment. Want to introduce Jim Felton from Greenberg and Bass. Welcome to you, Jim.
Thank you very much, Brian.
And folks, you can hear us here every Sunday afternoon at this time as we talk about tax problems, tax resolution. Tax season is now. If you haven't filed yet, maybe you are overloaded with tax problems. Maybe you're like me, and maybe you got a call from our friends up in Sacramento who said, hi, you have a problem. They didn't put it exactly that way, but or the IRS maybe has made contact with you, and you need to move forward and deal with these tax issues. I know that your firm, of course, Peter Stephan over at the Tax Resolution Institute, you do traditional tax work. You file returns, but you specialize in resolving for taxpayers unresolved tax issues.
That's correct, Brian. We specialize in collection matters. You know, most CPAs prepare tax returns. They get audited, and either they get good at audits or they don't, but no one notices because only 1.2% of the returns get audited. These are handled by revenue agents, and a lot of CPAs handle this type of work. We specialize in what we call collection, handled by revenue officers. They're the collectors at the IRS. You can imagine who might be more aggressive, the auditors or the collectors.
I'm going to go with the collector.
Yeah, I think so.
See, I'm not dumb.
And it's a very specialized area. In fact, there's an entire section of the IRM, the Internal Revenue Manual, that's dedicated to collection matters only.
Peter, do IRS collectors, serious question, do they work on commission?
No, they don't. But they do.
But they sure act like they do.
They do get scored at some level by their success in collecting outstanding tax debts, just like any of us get scored, if that's the correct terminology.
Whether it be ratings or the number of books you sell or how many people watch your TV show.
Absolutely right, Brian.
Yeah. Peter Stephan of the Tax Resolution Institute dealing there with talking about kind of individual taxpayers who have unresolved tax problems. And I want to get to Jim Felton here in a moment because I want to talk about businesses because a lot of business people are listening this tax season. And you can hear us right here on the Tax Show every Sunday at 3:30. If you want to get in touch with the Tax Resolution Institute, their number is 800-658-7590. That's 800-658-7590. Over the half hour to come, we'll give you that number several more times so you will have it handy. Get your pen or pencil ready to write it down. Peter, a lot of people think that if they file bankruptcy, that their tax burden goes away. Is that true?
Well, it could be true. Jim is the bankruptcy expert, but I know enough about bankruptcy and taxes, I like to say, to be dangerous. But the truth is that most people think that taxes are not dischargeable in bankruptcy. Nothing can be further from the truth. In fact, individual income taxes are dischargeable in bankruptcy under 3 rules. To make it quick, there's a 3-year rule, which is the generic, the broadest rule. 3 years from the due date of the return, including extensions, income taxes are dischargeable in bankruptcy. Then there's the 2-year rule. This is for delinquent returns. And there's the 240-day rule. That's if you get audited and want to do a bankruptcy, you only have to wait 8 months, so 240 days. Payroll taxes, on the other hand, that is business taxes, are non-dischargeable debt. So income taxes are dischargeable in bankruptcy. Business payroll taxes are not dischargeable in bankruptcy.